Welcome to another Arius Wave update. Now, in this video, we're going to talk about XLM. So, you'll probably notice that I haven't done an XLM video for quite a long time. And the reason for that, probably mostly underlying, is that I was waiting for more price action to occur, right? And that's what we've seen to some degree. But it's not just because of the XLM chart. It's also because of Bitcoin, and it's also because of Ethereum, and it's also because of the stock market analysis that I have produced lately over the last several months. But I've also taken my sweet time in bringing anything to you because I just wanted to make sure that I had my ducks lined up with the analysis so then I could sort of bring some material that really aligns with all these charts in a way that you know makes sense, right? Because I'm going to be flipping, with I'm going to be flipping between charts of different markets, and to prove this point, to show you this analysis, because it's actually very intriguing what's happening now. Mostly because at some point I was calling an E wave. Now, mind you, XLM has not made an all-time high yet. But I didn't rest on my laurels. I actually went ahead and did deep research on and analysis on the stock market chart, which is the Dow Jones mainly because it's got the longest historical data, and basically then everything that followed, the Nasdaq, the Australian market, which actually gave me the biggest clues, and then also the German market. But anyway, the indexes, right? So it's all come back full circle to crypto and XLM, and it's given me a whole bunch of insights as to what I believe is happening. Now, I did expect an E wave to happen at some point, but because of the way that things have been happening lately, I think that a lot of jawboning and a lot of money printing has led to this E wave being quite small, right? So as you can see, I've highlighted right there in yellow. It seems that that's the E wave that we got in March, right? From December to March to, April, whatever. All right, we had several months of choppiness followed by a pop up. Now, we haven't had the confirmation yet, not on the XLM chart, but we've had it on other charts, right? So I think it's just a matter of time. Now, obviously, that's an assumption, but there is more to talk about to do with this chart. Now, the reason I'm labeling this as an A, B, C, and this is a large D wave, right? So the D wave is the largest move in this correction. Now, all this analysis is based on Arias wave. This is the methodology that I discovered. It's not Elliott wave. It's much more detailed and complex than Elliott wave, but it's actually easier to understand the waves once you identify the pattern. So before, the problem was that I couldn't identify the pattern, which is why I had to go back and spend several months trying to really size up that Dow Jones chart. But it had to link with the Australian market chart. It had to link with the German chart, right? The indexes. And this was critical to understanding what Bitcoin and alts are doing to some degree, right? Now, with a lot of alts, you've got limited data, but at least with, XLM, XRP, you've got a little bit more data, and Ethereum, which is I'm going to talk about as well. So I might label this as an XLM chart because a lot of people who watch Arias Wave content like XLM, but it also integrates with a lot of other charts that you're going to see. So let's start off with the BLX chart for Bitcoin. Now, this is what I believe is going on in terms of Bitcoin, right? Now, it's a little bit different than what's going on with the Dow Jones, but I'll explain that to you shortly. Right now, we're talking fractal patterns here. So I want you to try to visualize what's going on here. Now, we have a D wave, here that I believe is the thing that's going to take this Bitcoin potentially to 1 million, right? I've made an assumption on that at this point, right? I've made an assumption. And the reason for that is because I'm assuming that wave E ended at the highs here, same as XLM. But there's other charts that I'm going to show you that back this up. But it has been the least clearest D wave to identify though. And when I say D wave, yes, I am referring to a zigzag pattern. But if you understand what RS wave is, or how the zigzag patterns evolve, you can get three varieties. You can get a regular zigzag, right? Where you get the first move down, followed by A, B, C, D, E, and then followed by the last move, right? That's a regular zigzag. The corrective portion ended below the end of the first move, right? The next zigzag is an expanded type 1. So you can get an A, B, C, and then the D wave can expand dramatically, but you get wave E that comes back to end at the same level as the end of the first move, wave A, right? And then you get your move. Now the type 2s are the most craziest ones because you get your first move, you get your A, your B, you get your C, and then you get a massive D and an E, and then the last move. The difference between these last two, zigzags is that the wave E ends far away from the end of the first move, below in this case for the down zigzag, or above the end of the first move for the zigzag that points up, right? Anyway, this is the type of thing that I teach in RS wave. So we're looking at the D wave being a type 2, but obviously in reverse, right, to the upside. The wave E ending far above, right? So not only is the larger pattern a type 2, but the D wave's also a type 2, right? Wave B was also a type 2. This is the interesting thing about the B wave. Now, I'll go into the B wave in a little bit more detail in another video, but this was the one that really solidified the analysis for me. This particular pattern here was the hardest part to figure out. It was so complex. But anyway, so what this means is, so what I'm trying to say is this is a D wave, and then within the D wave expanded. So we've got a large D wave inside a larger D wave. What does that mean, right? So let me show you the Dow Jones chart. Now, if I show you the Dow Jones chart, I've made some modifications to this analysis since the last video, right? But only minor ones. Anyway, it's not really that critical at the moment. I'm just going to remove some of these things I used for a presentation not long ago. So basically, this is what I'm thinking is going to happen here, right? We're going to get, Great Depression was a wave C, right? According to my latest. After wave C, you get a wave D. Wave D is massive on a grand, massive scale, unfolding before our eyes. This is the wave that we will be seeing throughout our lifetime, probably for the rest of our lifetime, and it'll still be going. This wave D took me quite a while to figure out. Now, within the first part of the wave D, you've got what came later, A, B, 1987 crash, C. Then we had the beginning of the next internal D wave. And what's crazy about that, even more crazy, is that within that internal D wave, the D wave is also expanding, right? So yes, it's a D wave within a D wave within a D wave that's expanded. Sounds crazy, right? But this has been the key to the whole entire analysis. So basically what I'm saying is since the GFC, we've seen an expanded D wave. All right, now I tried to explain this in my last video, but I missed out on some key points. It was that complicated. So I'll briefly touch on it now by going back to the Australian market chart. All right. So here we can expect the Dow Jones to head towards 74,000. Okay. In this particular run. When it comes to the Australian market, this is very important that you understand this part here, because this is the key to what I'm trying to say here. Now, this is the way the Australian market looked during the same time, and how can it if it's impulsive? It's not. It's a zigzag with expansions. So the 1987 crash, still a C, right? You had your first wave A, you had a little wave A, so a wave A in brackets, the start of a D wave, an A, B, C, and then an internal D wave, right? Now the internal D wave, same deal. It needs to go to 12,000 to complete. Currently at 9,000, so not that bad, not that much movement compared to the Dow Jones, but it's still an internal zigzag that needs to complete. Now, this is important because we have an area of importance when it comes to the reason why Bitcoin is in a D wave, is because where Bitcoin came out was in 2008, right? But it didn't get a chance to produce the ABC pattern during the time, like between 2011 to COVID, right? So the way that the pattern is unfolding internally for a zigzag, it's slightly different, right, than the stock market. So I did a little bit of digging on that pattern recently, and I can see that there's just a slight difference in the pattern up to 2014 being the first impulsive move for a D wave zigzag. Now, the reason why I think this is important is because the D wave is expanded during the same time as, you could say that the Dow Jones D wave is expanding, but because the Dow Jones is still within a smaller D wave compared to the larger pattern, we still need to see a series of E waves to complete zigzags, right, for the D waves. Now this is pretty complicated stuff, but if you try to follow along over the next several videos, I'll try to explain it and make it a bit clearer. This is just the beginning of the explanations that are coming. So you had your first massive impulsive move up, right? This made up for lost time in terms of the market with about 10 million% increase. Then you had your ABC internally here, D wave of an internal D wave, right? So the internal D wave being here, the larger one there, but it doesn't matter in terms of the Dow Jones pattern. It's going to be similar time, similar in length and in time, or whatever, that the Dow Jones will produce its C wave of its D wave. So can that go to 1 million? Well, it depends. It depends if the E wave really ended here or did it end lower, right? Because if it ended lower, there's a chance it could only go to about half that, maybe 450,000, somewhere around that. But it's hard for me to distinguish that at this point. I need to just continue to work more on this particular pattern. But at this stage, if it's in line with everything else that I'm seeing, then this is a very important area up the top here. Wave E can be small. Now, if you also look at the, without looking at it from an Arias wave perspective, if you're looking at it from a regular technical analysis perspective, you've got like an inverse head and shoulders, right? And if that's the case, then you take the length of that to the neckline roughly, and then you go up above. that takes you to roughly, the 450 area. So there's a chance that the E wave ended lower. I think that it might have been around here, but at the moment I'm only putting this here in line with other charts that I'm seeing. So don't take this one too seriously for 1 million.3. I would be thinking probably more realistically around 450,000, right? But once again, it's irrelevant because this is an XLM video. When I get more in-depth analysis on that, I'll come back to it. When it comes to the same pattern for Ethereum, all right, it's a similar thing, right? You had your first wave A, your A, but except this zigzag, the B was not an expanded zigzag. It was just a regular zigzag. So it had an A, B, C, D, E. What's the target for this move? It's 69,000, right? This one's a little bit clearer at this stage for me than it is for Bitcoin. So take it with a grain of salt. That's all I want to say about this particular chart until I create another Bitcoin video where I'll cross-reference these together. But it's once again down the bottom here, this is probably, I haven't updated this since I discovered the internal zigzag pattern. This is probably a C wave down here, and this is probably a D wave up here. So it doesn't matter, it's a zigzag. That's the only thing I'm trying to highlight in this particular video. So basically, capping this off, I'm just trying to say here that if you're in line with the D wave idea in the Dow Jones since the GFC, and you're also in line with the Bitcoin, producing the beginning of the D wave in 2015, then the only thing that you could say about this particular chart, and I'll just quickly go to the daily chart for a minute just to show you something. You can see that during the time the A wave was being created for the Bitcoin pattern, instead what we were seeing here was a series of zigzags up, producing like what you would call a leading diagonal. Very sharp wave 2, large wave 3, sharp deep wave 4, and then a 5. So to me that, it's still in line with the analysis, which is why you haven't had the all-time high yet, is because you did have those internal moves still occur at that time, and the E wave ending down here. Unlike Bitcoin, which has gone several times all-time highs because it's a different pattern, right? It's a different structure, but it's still the same D wave. It's just a different kind of zigzag. I mean, for various reasons, obviously you can understand supply, circulating supply, all that sort of thing, whatever, big deal. I'm not trying to get into that here. I'm just giving you the beginnings of a series of videos that I'm going to produce, because obviously it's been a long time since I've posted much, but I've been very busy trying to comprehend how all these things fit together in order to produce the content, in order to make sense of these things and look for levels, this and that. We haven't had the confirmation, but we're probably going to get it soon. And, it is possible for us to have a move that goes pretty high temporarily, right? Now, I think this has ramifications for the economic system in general, even if it is temporary. It means that there's some things could break if that type of thing happens. If crypto goes high across the board, things could break. You got to think about that for a minute. Think about it. Think about it. How could it break? Well, it could lead to massive inflation if everybody decides to move to, USDC or USDT, whatever, and basically inflate the dollar supply. It's indirectly causing big problems, right? This is very interesting. It's a very interesting subject. If you want to know more about that type of thing and what could potentially happen, just ask ChatGPT, right? You never know what can happen. And look, there's way more for me to cover on these type of subjects now that I'm more macro based. In my analysis, I'm still with a hint of RS wave, but macro on the back end, I've been learning a lot. So please stay tuned for the next video. Thanks for watching.